Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Navi Singh, Global Partner at Antler, an early-stage venture capital firm, to discuss the startup world's diversity problem. Navi, it's great to have you with us. Welcome to Trade Talks.
Pleasure to be here, Jill. Thanks for having me.
You got it. And why is there a problem with diversity in the startup space? Is it due to lack of talent or opportunity?
Yeah, we think it's definitely the latter. We think, talent is everywhere. Opportunity is not. A massive number of extremely talented, hardworking, and passionate people lack at least one of three key ingredients that you need to effectively build your own business. You need a strong network, you need to find expertise, and obviously you need capital. We think that typically what ends up happening is you have these pockets of the world where there is a stereotypical model of an individual trying to build a company, and they're able to leverage a rich uncle, their respective networks, whether it's from their university or their work, and where individuals don't have access to those networks, they're not able to get things off the ground. Right? And so, we can happy to dig a little bit deeper into that, but we definitely think it is a problem related to opportunity versus talent.
So Navi, let's dig in deeper there. What is Antler doing to reduce the barriers to entry?
Yeah, so we are effectively a global, as you noted, venture capital firm that provides an on-ramp into entrepreneurship. So we wanted to be able to provide entrepreneurs or would-be entrepreneurs everywhere a very easy mechanism to get access to that expertise, to get access to a very, very strong network of advisors and have clear line of sight to capital. So what we do is we run programs across the globe. We are currently active in about 20 different locations. We provide 6 to 12-week programs where we bring in founders or would-be entrepreneurs, work with them and help them kind of dig through their idea, whether they're at the ideation stage, whether they've hacked something together, or whether they are, a little bit further along and just need to kind of find, what's keeping them from getting that product market fit. We effectively allow them to come in with zero capital. They don't even need an idea. You just need to be passionate about a domain that where you think you see a problem and you want to solution something for that domain. And we can help you get access to our network that can guide you through how to build a company, how to raise that subsequent round of funding, how to connect with the right companies to test this idea out.
Right. And Navi, let's talk about the current environment right now. Certainly, we've gone through a market downturn. There's been a valuation reset. There's different things that VC firms are looking for in terms of management. Is there a path to profitability? Are you making money? Really is the question. It's more than just telling a good story and looking at the company's valuation. So my question to you is there a silver lining to what we've seen with this market downturn and valuation reset?
Absolutely. Look, there are kind of three perspectives from this. From the founder perspective, you have to look very closely at your burn rate, your runway. You have to look at business models that are capital intensive. Are you growing at all costs and not really worrying about revenue? Those models tend not to work as well when there isn't as much capital available or readily available in the market. From an investor perspective, obviously, there is limited capital available, so fundraising can be difficult, but we want to be really mindful that we're looking at our portfolio and making sure that we can help accelerate fundraising rounds, because we know that in an economic downturn, rounds are going to take longer to come together. There's going to be larger gaps between rounds. And so really, really be mindful of how these companies are, approaching fundraising and how they're managing their cash balance. From a macro perspective, this third perspective, Antler's view is, look, great companies will be built now. It's always interesting to see where, you see these economic downturns and people get worried that, okay, maybe there isn't going to be as many resources available for entrepreneurs, but it actually ends up being, the opposite, where you have entrepreneurs really focusing on the fundamentals of building a business. If you look at 2008, you have companies like Square, Airbnb, Uber, Venmo. If you go back further in 2001, right before the dot-com bubble, you had companies like Google and Salesforce that launched. And you can kind of keep going back. Microsoft was built during the 1973 oil crisis. And then, all the way back to the Great Depression, where you had Disney, right, launching in 1929. So we think what ends up happening is you get a lot less noise, a lot less hype, and a lot more fundamental building on what it means to build a good business, right? And so we think that there are absolutely great opportunities out there for founders to come in and build the next Google, the next Microsoft,
Right.
the next whatever.
Yeah, there's all great points that you made, Navi. And to wrap up here, it seems this iteration of the market downturn is really focused in the DeFi and digital asset space. And you had noted that separating the wheat from the chaff when it comes to blockchain technology and crypto is really critical when you're thinking about where to put those investment dollars. What do you mean by separating the wheat from the chaff?
Yeah, as I'm sure everyone has heard or seen, the crypto market has been very much active, and there's been a lot of hype, a lot of projects that are being built out, and the fundamentals of those projects may not be very sound, right? But we think that if you look at the previous bear markets as it relates to crypto, Ethereum was born out of 2014 bear markets. Polygon and Avalanche came out of 2017. And similar to what I noted earlier, we think bear markets allow builders to focus on building without all the noise that goes along with bull markets, right? Obviously you have to have a resilient business model because the market's much less forgiving. You can't just go out and raise on hype because you're a really tier one founder with great logos on your resume. You have to really show some level of traction, some level of product market fit, some level of promise in what you're building has staying power. And so what we mean by separating kind of companies that are going to define Web3 for the next decade, we think it's going to be a lot more fundamental business models that are based on kind of first principles as opposed to just hype, right? Exciting, put a logo up or put an animal portrait up and then you're raising a bunch of money. We think you have to really figure out the underlying utility and the underlying value of what blockchain adds to your business model.
Yeah. All right. Navi, appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.